Hey everybody, welcome back. Florida Stacker back here with you. Let's get started with today's market analysis. All right, we're going to jump right into it. We got an article here from Jim Wyckoff, one of my favorite authors. This one was published by Kitco News. So let's get started. All right, so for everybody, as a reminder, these words are the author's words. I'll add my opinions to it, but this is not my article. Frequently, when I do these market watch updates, reading an article, I get a lot of comments as if I was the one publishing the words. I'm not. I don't agree with everything that I read. I like to analyze it. So go ahead and listen in and let me know what you think as well. So the editor's note starts out that with so much market volatility, stay on top of your daily news and get caught up. And that's why we're doing it here. All right. Lots of market volatility, so want to keep you informed. Gold and silver prices are trading not far from unchanged levels in early U.S. trading Wednesday. The precious metals at midweek are experiencing the cross currents of a weaker U.S. dollar index that is supportive, but higher U.S. stock indices that are bearish. June gold futures were last down $1.90 at $1,745.80, and May COMEX silver was last up a little less than 2 cents at $25.44 an ounce. So global stock markets were mixed overnight. U.S. stock indices are pointed toward mixed to firmer openings when the New York day session begins on April 14th. Volatility in stock markets does remain low, which is also favoring the bulls. Also, easy money from the major central banks, government stimulus programs, which we talk about here frequently, and notions economies are set to spring out of the COVID pandemic in strong fashion. They are fueling the record-setting bull run in equities. In focus today will be the U.S. corporate earnings reports. The key outside markets today see the U.S. dollar index slightly down. That's usually bullish for gold. The greenback bulls have faded recently. NYMEX crude oil prices are firmer and trading around $61.15 a barrel. I'm going to guess that the recent release of CPI in the 2.6% range now has something to do with that. Oil prices are trading in a sideways and choppy fashion. Meantime, the yield on the benchmark 10-year U.S. Treasury note is presently fetching around 1.632%. For perspective, the German 10-year bond yield is presently minus 0.295%, and the 10-year UK gilt yield is trading at 0.774%. So things, as mentioned in earlier videos, while bleak here in the US, are actually better than some other places in the world when it comes to safe haven investing like bonds and even savings accounts. Obviously, earning interest of less than 2%, you're really just losing money. I think you probably need to earn somewhere between 6 and 7% not to lose money during 2021. With all of the spending and inflation out there, often that goes unreported. All right, so U.S. economic data due to release Wednesday includes the weekly MBA mortgage applications survey, import and export prices, and the weekly DOE liquid energy stocks report. Several Federal Reserve officials, including Chairman Powell, are also set to give speeches today on April 14th, so we could see some market movement when those individuals begin talking, as usually tends to be the case. Okay, let's talk about the technicals for gold and silver. So technically, the June gold futures bears have the overall near-term technical advantage. However, a price downtrend on the daily chart has stalled out, and more price gains in the near term would confirm a bullish double bottom reversal pattern. That would be another chart clue that a market bottom is in place. Okay, so for those of you that have been following this channel for some time, maybe about 2 weeks back, I posted a market update video where I said, I think the bottom might be in. I think we might have seen the bottom when gold dipped down into the 1670, 1680 range. It just felt like it. It felt like looking at other equities, looking at cryptocurrencies, that was a momentum oscillation point, right? There was a lot of chop, a little bit in a downward direction for certain asset classes. And all of a sudden, it seemed to have flatlined and begun recovering. I think that this author is correct here. I think that we have seen the bottom for gold as of now, and that we will now start seeing the gradual increase in gold valuation. And silver, of course, will probably gain, as a percentage-wise, even more than that as it begins to follow gold. Plus, with silver, which we'll talk about the technicals on silver here in a moment, silver demand is still near record highs, okay? The same cannot be said about gold right now. Retail investor demand for silver still at all-time highs. Very difficult to get your hands on silver at a low premium at this time. Okay, so continuing on, Bull's next upside price objective is to produce a close in April futures above solid resistance at $1,800. That is the next target for gold. Bear's next near-term downside price objective is pushing future prices below solid technical support at 1,700. So right now we're seeing a ceiling around 1,800 and a floor around 1,700, gold trading in between that range for the last couple of months. First resistance is seen at the overnight high of 1,750.70. All right, and then at April high of 1759.40. So resistance right now hanging around that midpoint. First support is seen at the overnight low of 1741.10, and then again at 1730. So we're talking a very small margin between resistance and support here when it comes to gold. And Wyckoff's market rating for gold right now is a 3. So may silver future bears have the overall near-term technical advantage. Prices are in a 9-week-old downtrend. If you recall, just about 6 weeks ago, silver was knocking on $30. All right. Silver Bull's next upside price objective is closing prices above solid technical resistance at $26.74 an ounce. Obviously, the next downside price objective next for the bears is closing prices below solid support at the March low of 23.74. So definitely a larger margin between resistance and support with silver, but that is normal as silver is the more volatile of the two precious metals. First resistance is seen at last week's high of 25.67 and then again at $26. So there will be some pressure against silver to break that $26 threshold. Next support is seen at 25 and then at this week's low of 24.68. Wyckoff's market rating is 3.5 for silver. All right, so the author does still feel a little bit more bullish for silver. A lot of people out there that have been stacking, accumulating, investing in precious metals for a long time tend to notice that around about 60, 70, maybe close to 80%, somewhere in that range of the time, that silver does follow gold and then eventually surpasses the percentage-wise wide gain that gold experiences. So to put that into perspective, let's look at it this way. Let's assume for a second that gold moves up to $1,800 from its current level of $1,750, and we see, a couple percentage gain in gold over the next month. Well, during that same time period, we would see a larger percentage gain in silver. Silver at that time would be trading over $26 an ounce. So from an investment standpoint on paper, it does make a little bit more sense to invest in silver at this time. However, when it comes to physical, all right, and I don't consider physical precious metals an investment. I look at them as a savings account, all right, point blank. Because let me tell you, I hear a lot of people complaining about how if you put cash in a savings account, you're only going to earn a very small fraction of a percentage in interest, right? I get comments on my page or my channel all day long about cash is trash. Yet these same people are willing to go out and spend $10 in premium on a silver coin that will take them a long time to even recover. So those that are hating on low interest on an account that, is devaluing due to inflation are, a little hard on cash when they're purchasing an asset, a silver coin, for instance, that they're immediately in the hole. You're immediately in the hole. If you go to your local coin shop and spend $35 on a silver eagle right now, he's only going to pay you maybe $30, $31 to buy it back, maybe even less than that. So keep that in mind that while silver on paper is a better investment at this time because it is more volatile, it is down. We're seeing silver down below those levels. It will break $30 this year. It's going to happen. And gold will continue its inevitable march upward as the market is definitely now writing in the inflation that we as stackers have known to exist in the market now for some time. They've been trying to cover it up, act like it's not as bad as it is. It's really increasing, ladies and gentlemen. It really is. I really don't care what article you can quote to me here in the comment section. Just go to Home Depot, try to buy some lumber, go try to buy some tile, go buy some food, go fill that big truck up that you own with some gas, or go buy some oil. Tell me I'm wrong, okay? And then also we know that there's a lot of inflation in asset prices, namely cryptocurrencies, the stock market, and retail. So anyways, guys, I hope you enjoyed today's video. I think gold is the long-term play, and silver obviously will have its day. So I'm still stacking both. You guys have a wonderful, wonderful day out there. Thank you for tuning into the channel. If you liked what you saw today, please do consider subscribing. We do these market updates several times per week. I really wish I could do it every day. And the last thing I'll say, I know I did just say sign it out, is that remember, gold and silver, the physical kind, is the long-term game, okay? It's long-term. The only way you're going to make money buying physical gold and silver quick is by flipping hot collectible coins, or by getting your hands on something like American gold or silver eagles at a very low price and then selling them on the open market. That's the only way to make quick money in gold and silver. Otherwise, it's a long-term game. Remember that before you make your first purchase. Once again, have a great day.